All right. Welcome once again to this channel. And in today's discussion, we'll be looking at a pattern, two patterns. One is the cup and the handle, and the second is the inverse cup and handle. Very important. These patterns, they are both continuation patterns. I believe you understand what I mean by continuation patterns, because since the series commenced, we've been looking at some chart patterns. We've talked about a reversal patterns. We've talked about continuation patterns. So these are continuation patterns. So when you see them, you know the market is about to continue in the same direction. So if you see a cup and a handle formation in a bullish market, it means the market is going to continue to go bullish. If you see the inverse cup and handle in a bearish market, you know the market is about to continue its bearish move. So I wouldn't waste your time. So we'll quickly jump into the main discussion of today, explain these formations and show some live charts of how they formed and what happened afterwards. But before I go on, I want to quickly remind you, if you haven't subscribed to the channel, kindly hit the subscribe icon. Also hit the bell, which is a notification icon, so you get notified when I release more videos on the channel. And if this is the first video you're seeing, you want to know more, get more contents about Forex, you can click on the channel, other videos on the channel, starting from the very basics of what is Forex. So you can see it from the very first video. If you go all the way down on the list of videos on the channel, you're going to see from the very beginning, and you can walk your way all through till you get to the advanced stage. So let's go on to today's discussion, which is, okay, the first one is the cup and the handle. So this is the continuation pattern in a bullish market. What happens? What does price action do? So price is coming all the way from down here, price moves, and price finds this resistance zone. Price finds resistance zone, hits it, and slowly, steadily goes down, hitting this, which can serve as a support zones, or it always form a lowest point. It will form a lowest point. And if you have your cup, if you look at your cup, you see that this looks like a cup. That's why it is called a cup and a handle. You can see your cup. You can see this cup. This is where you put in your water or your tea. You can see the cup, and then where you hold, this is the handle. So that's why it is called a cup and a handle. Some people call it a teacup. Some people call it a teacup. But basically, this is what it just looks like. That's why it is giving this name, the cup and then the handle. So onto the discussion of how the pattern is being formed. Price forms the lowest point and then still continues going, and then steadily or slowly it goes back and hits that same zone, that same resistance zone. Now once that happens, the cup has been completed. So you mark up the zone, mark up the resistance zone, and then you wait, because market is going to give a little setup for the handle. Now market comes all the way, bounces up from this, and forms another low, a support, which is usually higher than this support, very much higher. And then it comes all the way slow and steady, and then the handle is completed when price breaks out from this resistance zone. And then most likely price is going to give a retest before going all the way up. So this pattern is completed when that happens, when price breaks, retest, and goes up. So how do you trade? I recommend you have your stop loss at the point where you have the last support zone. You can have your stop loss here, mark this up as your stop loss to be safe. Always use a stop loss. And then for your take profit, you can measure the distance between this resistance zone and this lowest point of your support zone, and set that as a take profit when you enter after a retest. So if you do not want to use a measured move, you can always set a huge take profit. Maybe let's say 100 TP take profit, but always trail your profit. Once the market moves 30 pips, 40 pips, move your stop loss, which was here, into profit. Move it into 10 pips profit, and then just keep trailing it that way, and then until you get to your desired take profit point. So that way you're sure if the market reverses, you won't be in loss. You stop loss would have hit your stop loss, which is already in profit. So yeah, that's about it for how this formation is formed. So we're quickly going to look at a real live example. I took a screenshot on the euro against the USD on the 4 hours time frame. This happened on the 4 hours time frame. We had this formation play out. I couldn't get the full screenshot. So this, you see, price hits the resistance zone. And now, very important I mentioned, they mustn't be the same height, the resistance zone. They mustn't be the same height. At times, you have a fake breakout, like in this instance. Now, this would have deceived a lot of buyers to think they have a breakout and they would have bought, but boom, price comes all the way back, hits their stop loss. So they mustn't be the same height. They mustn't be the same height, but at least you can mark. That's why, remember, in our video when we're talking about resistance and support, we said do not use one line, one price as your resistance. It's good to use a zone. That's why I introduced this rectangle pattern that you use to draw and mark out your zone. So price comes back, slow, steady, hitting the borders of the handle, and then you can see you have yourself the handle of the cup, and then pattern comes, price breaks out, comes for a retest and starts to go into profit. But what does price do? Price comes back. Now, if your stop loss was here, you would have been safe because it wouldn't have hit your stop loss. Let me insert a horizontal line and let's see. The stop loss was here. It would have been safe. You see, stop loss was not hit. It would have been safe. So price comes, does this, and then before it starts going all the way up. So I'm going to show you a clearer or a bigger view of the same pattern of the same Euro USD. So you see, the breakout comes, does this, but then your stop loss is here, so you're safe before price moves all the way up. So if you had used a measured move, your TP would have been hit somewhere around here. You would have hit your TP. So that's it for the cup and handle pattern. So quickly, we're going to move on to the inverted cup and handle pattern. Pretty much the same thing with, if you understand why I'm explaining the cup and handle pattern, I think you also understand this. Just the other way around. Just you turn the cup to face the table. Then you have an inverted cup and handle pattern. So you see this in a bearish market, and it's a good sign for a continuation pattern in a bearish market. So price action is coming from a downtrend, comes, finds the support zone, hits the zone, slow and steady, hit the border of the cup, forms a point, a highest point of the resistance zone, and then continues hitting the borders, and then comes down to the same support zone, respects the zone, comes up, does a small, forms. So here we have the cup pattern, which has been fully formed. The cup has been formed, and then you have this play out, and then boom, you have the handle formed, and then the handle is completed when price breaks out from that handle. Price will most likely come back for a retest before going all the way boom. Now remember, if you want to enter here, remember to use your stop loss at the tail end of the handle, and then a measured move for your TP should be the distance between the support zone and this highest point of the resistance. Use that as your take profit. So that'll be it for the inverted cup and handle, and we'll quickly go on to see some live illustrations of what happened. But before we do that, if you have any questions, do not hesitate to ask. Do not hesitate to ask in the comment section. I'm going to reply you quickly on the same comment section. And I also like to mention, remember when I said this mustn't be the same height, just like in the cup and handle, the resistance zone, they must not be the same height. So you can always use your trend line and draw, not using the box. You can use your trend line and connect to the points, so you see your resistance zone. The same thing with this with the inverted cup and handle. They mustn't be the same height, the support zone. It mustn't be. So if you have this down here, you can draw a trend line to connect them, and then it still serves as your support zone. And then you wait for the breakout, and you also wait for a retest before you go in. So quickly, we're going to look at the live chart. Cut this on the NZD against the Canadian dollar. So price is coming from a downtrend, finds the zone, hits the zone, comes all the way up. You can see this is the highest point, which is the resistance, and then price comes down, boom, hits the same support zone and goes up, forms the handle. You can see forms the handle, and then comes all the way down, breaks out, and then comes to do a retest with this pretty little candle, and then price goes down. Now, if you're using a measured move, your TP, your stop loss would have been here, so very safe. And then your TP should be, the measured move should be between this and then this point. Calculate the difference and then set it as your TP, and it would have been hit somewhere around here. Pretty much would have been hit. So when I was talking about measured move, if you don't know how to calculate pips, go and check out the video. I have it on my page, on my channel. You see the video I posted how to calculate pips. So very important. I think this will be the last slide for this presentation. So if you have any questions, don't hesitate to ask me. If you intend to join, if you want to join our group on Telegram, please ask me. We have some awesome traders there, people that have been with me from the beginning of this channel up onto the advanced stage, and I'm very proud of each and every one of them. Some of them are now trading on their own, and some of them are now even calling out trade, and I'm learning from most of them. I also have some people that are also professional traders also join us, and we all share ideas together. The community where we intend to grow together. So if you want to join us, do not hesitate to hit me up on the comment section, and definitely you join us on the group. So that'll be it. Please remember to stay safe. COVID-19 is not a play. It is real. It is real. It's not a joke. It's not a hoax. So do not forget to subscribe to this channel. And that'll be it. God bless you. Stay safe.